All right, everybody, get ready because today we're diving into some pretty deep waters trading-wise. We're talking advanced liquidity.
Hmm.
It's based on those excerpts you sent over from Elad Menda's PDF. It's like peeking behind the curtain to see how the big dogs, the institutions, might be
That's exactly true.
using their own predictable behavior against us to their advantage.
Yeah, exactly. And what I find so fascinating about Menda is that he just comes right out and says it. It's almost like he's setting up this adversarial relationship. You've got the banks, the algorithms on one side, and then you've got us, the retail traders, on the other.
No kidding. It can definitely feel like that sometimes out in the market. We think about liquidity, how easy it is to buy or sell without moving the price too much. But Menda, he takes it way beyond that basic definition. He links liquidity directly to these ingrained patterns in how we behave as traders. He even breaks it down further into sell-side liquidity and buy-side liquidity. And honestly, the first time I saw these terms, I was like, more jargon. But it's actually brilliant when you break it down.
Oh, absolutely. And it completely changes how you view the market. Let me ask you something. When you're placing a trade, any trade, where do you usually put your stop loss?
Let's see, if I'm going long, I'd probably put my stop just below a recent swing low, hoping it doesn't break down any further. And then the opposite, if I'm shorting, just above a recent high. Pretty standard stuff right there.
Sure, totally standard. But think about what you just did there and what countless other traders are doing at the same time. You've essentially added to a pool of liquidity that the big players, they can see that and they might target it. If the market goes against you, even a little bit, all those stop loss orders, they get triggered. It creates this cascade effect, pushing the price even further in that direction.
Okay, hold on. So you're saying those highs and lows, the ones we often use for entries and exits, they might not be so random after all.
Exactly. According to Menda, true liquidity, it doesn't just live at any old high or low. It congregates where we, as retail traders, are almost forced to buy or sell because of our own predictable actions.
Okay, so that's kind of scary, to be honest. How do we avoid walking into these traps? I mean, how can we even tell the difference between like a real support or resistance level and one of these liquidity traps Menda's talking about?
This is where it gets really interesting. Menda points to the Fibonacci retracement tool, those fib levels, particularly that 0.5 level, the 50% retracement. He says it can be really telling.
Okay, I'm intrigued, so walk me through it. How does that work?
Let's say the price shoots up, classic rally, and then pulls back a little bit. Now, if during that pullback it doesn't quite reach that 50% retracement level, that's a sign. It might mean there weren't enough retail buy orders placed down at those lower levels, so there's not this big, juicy pool of liquidity just waiting to be tapped.
Because not enough traders bought in on that initial rally. So not as many stop-loss orders sitting below the market ready to be triggered.
Precisely. And the same logic applies on the flip side. If you've got a price drop and it bounces back up but doesn't quite hit that 50% fib retracement level above it, Menda would say, watch out. There might not be much sell-side liquidity up there either.
Because not enough traders panicked and sold at those lower prices during the drop.
Exactly. It's about understanding where the herd might have placed their stops based on, classic retail behavior.
This is honestly blowing my mind. It's like he's giving us a cheat sheet to the market. Okay, so now that we can see these potential traps, what do we do with this knowledge? How do we use it to actually trade better?
That's where Menda's real trading edge comes in. He combines this whole liquidity analysis with, you guessed it, support and resistance. Support and resistance music to my ears. I mean, those levels are...
Exactly. And you know what? So do millions of other retail traders. And that's what makes them so relevant to these Menda strategies.
Okay, I'm with you so far. Keep going.
Remember all that talk about predictable stop-loss placements?
Mm-hmm.
Well, guess where they tend to cluster?
Around support and resistance levels, right?
Bingo. Creating those tempting liquidity pools that, someone who's, shall we say, strategically inclined might look for.
You mean like institutional traders who might be gunning for those stops?
You said it, not me.
Yeah.
But here's where Menda takes it up a notch. He gets really specific. He doesn't just draw any random line on a chart and call it support or resistance.
Yeah, I've definitely been guilty of that myself. Happens to the best of us. But Menda, he looks for what he calls precise levels, and those are areas on the chart that have been tested at least 3 times.
3 times. Why 3? Why not like 2 touches on a level? Isn't that enough to confirm it?
I love that you're asking these questions. It all comes back to, us, the human element, that herd mentality we've talked about.
So true.
Think about it. If a price bounces off a level once, okay, maybe it's a fluke, twice, you might start paying attention. But 3 times, that's when a lot of us start thinking, all right, this level is the real deal.
This is where the line in the sand is drawn.
Exactly. And so what do? We start placing our orders above or below that level with our stop loss orders just on the other side, of course, just in case.
So we're all looking for those patterns, those confirmations, and 3 taps on a level. It feels like a pretty strong signal.
Right. And that is precisely what someone like Elad Menda uses to, well, let's just say, navigate the market a little more effectively.
Okay, this is getting good.
Yeah.
So he's using this knowledge, this understanding of how we think as traders, to his advantage.
Let's put it this way. He understands that breakouts, when that price finally smashes through a support or resistance level, those are exciting. And a lot of traders, they see that as a green light to jump in.
Oh, 100%. The classic trend is your friend mentality.
Yeah.
That's when I'm most likely to FOMO into a trade.
And I'm guessing you usually put your stop loss just on the other side of that breakout level, right? Just in case it's a fake out.
Busted. Got to manage that risk, right?
Smart. Totally logical.
Yeah.
But it's that predictability that's part of what fuels this strategy Menda's known for. He calls it the Menda reversal.
All right, the moment of truth. Break it down for me. How does this Menda reversal actually work?
Picture this. You've spotted this beautiful support or resistance level, right? Clear as day, at least 3 taps on it.
Check.
Now, all of a sudden, the price breaks through that level, sometimes with this huge, convincing candle.
Oh, I know that feeling. The heart starts racing a little bit.
Right. And all those traders who've been watching this level like hawks, they jump in thinking, this is it. The trend has changed. Time to make some money.
To the moon. I can practically hear the keyboards clicking.
Haha, exactly. And where do you think most of those eager beavers are placing their stop loss orders?
Just below that breakout point, of course. Maybe like 10, 20 cents below to be safe.
And that is where the Menda reversal comes into play. Because what happens next isn't always that straight shot up to the moon that everyone's hoping for.
Oh, I'm sensing a plot twist.
Often, after that initial surge, that burst of excitement, the price, it takes a little breather, a little pullback.
And those stop-loss orders, all those eager buyers just sitting there waiting.
Like sitting ducks.
Pretty much.
And that's when it happens. The price dips back down to retest that flipped level. What used to be resistance is now support, or vice versa, and boom, it clips those stop-loss orders.
Setting off a chain reaction, pushing the price down even further.
Exactly. And you know what the worst part is? Some of the traders who missed that first move, that initial breakout, they see this dip, this pullback, and they think, aha, a second chance.
Yeah.
But they're actually walking right into the...
Lion's Den.
I was going to say, the jaws of the Menda reversal. But yeah, Lion's Den works too. It's almost poetic, isn't it, the way it all plays out?
If you're Menda, maybe. If you're on the other end of that trade, not so much.
Yeah, true. But I think even he'd say there's a certain beauty to it, this kind of elegant dance between, psychology and these technical levels on the chart.
Okay, I'm ready for a concrete example. Walk me through one of the setups he describes in his PDF. Show me how this Menda reversal looks in action.
All right, let's say we're looking at a stock, been on a steady climb, making higher highs and higher lows, textbook uptrend, right? It's been bouncing between this clear support level at, let's say, $10 and a resistance level up at $12 for the past few weeks. 3 clean taps on each level, just how we like it.
Got it. Bulls are in control. Everyone's feeling bullish.
Exactly. Now imagine one day, this stock, it just gaps up above that $12 resistance level, closes above it, big, strong, bullish candle. Suddenly, all those traders who've been watching and waiting, they jump in headfirst.
Classic breakout. I can already see the headlines. This stock is going to the moon.
Haha, every time. Now, question for you. Where do you think most of those buyers, where are they placing their stop-loss orders?
Just below that breakout point, right? Probably somewhere around $11.80, just to be safe.
You know the drill. And this, my friend, is prime Menda reversal territory, because what often happens next, it's not that straight shot up to the moon that everyone's dreaming of.
Uh-oh, what happens?
The price, it takes a little breather. It starts to retrace, drifting back down towards that $12 level.
Which is now acting as support, right?
Precisely. And guess what's sitting right there, just below the market, sweating it out.
All those stop-loss orders from those overeager breakout traders.
Ding, 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 we have a winner. So the price, it dips a little more maybe on a news headline or just some profit taking, and bam, it clips those stop-loss orders at $11.80.
Setting off a chain reaction, pushing the price down even further, just like you described.
It's like clockwork. And what's even more interesting, some of those traders who missed that first move, they see this dip and they think, oh, perfect, a second chance to get in.
But they're actually walking right into the trap. brutal.
The market giveth and the market taketh away, my friend. And the crazy thing is, this pattern, this Menda reversal, it's not limited to uptrends either.
Oh, really? Tell me more.
Yeah. You see it in downtrends, too. Think about it. Breakouts below support levels. Same principles, same psychology at play.
That's what makes this whole concept so powerful. It's not just about, like, memorizing some random pattern on a chart. It's about understanding the why behind it, the human element that drives these moves.
Absolutely. Once you start seeing the market through this lens, through this understanding of liquidity support and resistance and these predictable behaviors, it can be a real game changer.
It's like you're finally seeing the matrix, the code behind how the market operates.
Exactly. And the best part, this is just the tip of the iceberg with Elad Menda's work. There's so much more to explore in his book.
It's like he's giving us a treasure map,
Yeah.
and it's up to us to go out there and discover the gold.
Exactly. And that, in essence, is what trading is all about, isn't it? Constantly learning, adapting, and trying to stay one step ahead of the game.
Couldn't have said it better myself. Well, folks, that's a wrap on this deep dive into advanced liquidity. We hope you found it as eye-opening as we did.
Definitely. Remember, trading is a journey, not a destination. So be patient with yourselves, be disciplined, and never, ever stop learning.
Words to live by. Until next time, happy trading, everyone.